Good morning, guys and girls. Thanks for tuning in and welcome to this morning's video. So I have 4 pairs on watch today. The market providing the moves. It took me a little bit longer to forecast this morning because the market has provided the moves, but once again, not the entries, unless you want to sit up through the Asian session, which is when 95+% of my entries actually seem to shape up for some reason, but that's fine. I'm not interested in wrecking my psychology sitting up all night. But regardless, I have 4 pairs on watch. So those are Aussie Kiwi, Aussie CAD, West Texas Oil, and Kiwi CAD. So I'm going to break these down for you. It also took me a little bit longer to forecast this morning, which is why I'm running slightly later, because the internet in Scotland, where I live, is quite frankly not fit for purpose. So the internet keeps dipping in and out. So if that happens throughout the course of this video, I apologize. But anyway, let's break these down. So my favorite of the bunch is Aussie Kiwi. You can see we had this. So I was considering the longs on this because we had the impulse up followed by the correction, and I was interested in the longs because this correction had become very wide relative to the move down which had preceded it. So I was looking at this as a potential M style pattern where essentially too much volume builds up and then we see price do something like that, impulse correction continuation, it breaks to the upside to tap into the high to start tapping into the highs again. But instead we just dropped out. We just completely dropped out. And if you can look at the weekly, that's not closed yet obviously, but we are trading now back below this high. So we had a series of near misses. Where did they near miss to? So although I was considering the longs, I'm not surprised that we dropped out because we had a series of near misses to here, suggesting that this was an attractive area of value, especially as we had a sharp move off from that area last time around. So essentially what happened here, at this moment in time, it looks like the buyers were just caught the wrong side of the market, and now you can see we're trading back below all of these highs, including this one. And one thing I did as well before I went live is I just measured this. Okay. So I'm measuring the impulse correction continuation. We filled about 95% of that move. So if this is a completed 1, 2, 3, then it's quite highly plausible that we could just drop out from there if this is a completed move. Okay, and it doesn't necessarily mean to say that we will stall and go higher. So we've dropped out. The market has shown its hand. Okay. As I said, it's not about being right. It's about managing risk. Okay, so I'm not interested in being right. The amateurs and all the megalomaniacs are interested in being right. I'm interested in managing risk, and you'll find that common pattern within profitable traders. Another thing I noticed is that after the big moves yesterday, and I've noticed this before, when we've had big moves and I happen to have forecasted the direction, regardless of whether my entries have actually shaped up or not, I noticed that my subscriber count on YouTube goes up. So I appreciate the subscribes if any of you did that. But what that tells me is the fact that when my subscriber count goes up during big moves, regardless of whether my entry shapes up, that tells me that based on a sample size of one forecast, okay, which didn't even provide the entry, a lot of people think, oh, this strategy works. Let's subscribe to this guy because he knows what he's doing, based on literally one move. Okay, so that tells me that many of those people are not probabilistic because they think that one forecasted move in the forecasted direction means the strategy works. And similarly, I've noticed that when we have big moves in the opposite direction to what I forecasted, my subscriber count goes down because people think this doesn't work and then they move on to something else. Well, you'll never achieve profitability with that mindset, I can tell you that much. So make sure that you're judging not just my forecast, but judging your own trades over a large sample size and not just over one move that occurred that may have even just been volatility. Okay, so just a little lesson there. So we've dropped out of all of this consolidation now. You can see we had a series of near misses. Okay, I was anticipating if we move to the downside a tap into that high. However, if we just switch to the line chart, you can see that that high doesn't appear, and it appears as a wick on every time frame, suggesting that this is actually just volatility, and that this here might actually be the high that's significant. Okay, this may not be indicative of the sentiment of the market. It was just before midnight UK time. Sometimes you get a bit of volatility there. Switch to the line chart. It's even a wick on the 15-minute chart, or it doesn't appear on the 15-minute chart. So price didn't necessarily need to tap into that. You can see that we've completely dropped out. There's not a lot to analyze here really, and all I'm looking for is to ride the waves. Okay, so I'm looking for a 3-touch 1 hour continuation or a 2-touch 1 hour continuation with a 3-touch structural approach. If we just really zoom into the 5-minute, price has left a footprint like it often does. Okay, so we've got a footprint there, and it's a sharp move. Okay, what's price done? It's near missed to the area. Okay, so it's the same psychology over and over again, regardless of what time frame you're looking at, and that's why we look for the setups we do, because human beings repeat themselves. Okay, so looking for this, and then I would look for the risk entry within the structure. If we got it, I've got an alert set just below these highs here, just to see if we can push back up to that area and form this kind of structure. And then if we measure the impulse, so I'm measuring this impulse down to there, and then we assume that the continuation leg out of an impulse correction continuation is of a similar length. That would take us down to the start of all of this consolidation. So we have this consolidation here, okay, with the 3 drives that retested the back end of that. We then have this running channel which broke out, and the base of that is here. Okay, so you would have down to the bottom of this structure, we would have something in the region of 3.5% to work with, and down to here we would have something in the region of 6.5 to 7%. Okay, and that was where you might be thinking, well, surely this could push lower. Well, it could, but first of all, you have to remember that this is Aussie Kiwi, and just regardless of that, in general, for price to get all the way down from here, all the way down to down to these lows and down to here, we would likely need to build a lot more volume along the way. So it makes sense contextually based on that little impulse correction continuation that I just showed you, that price, if it was going to build more volume to push lower, would likely do so there. So taking profit there and not necessarily sitting through long sideways price action, particularly on Aussie Kiwi, which does that by nature, makes contextual sense. So that is Aussie Kiwi. Let's move on because I've got 4 pairs to get through. Aussie CAD, a similar deal. In some respects, I prefer this because we are kind of retesting the back end of this. Okay, but I just prefer the positioning on Aussie Kiwi. It's a bit higher up. Okay, there's not multiple inflection points, whereas, well, we've pulled back. It's not so much the inflection points, actually. It's more we pull back quite a lot of that range. Okay, let's just measure that. We've actually pulled back quite a bit on Aussie Kiwi as well, but it's a more corrective pair, so I would anticipate that to some extent. But regardless, we tapped into that area by way of this 1, 2, 3 reversal structure, and you can see that we've completely capitulated to the downside, and that we are trading back below all of these highs, even that one as well, and we're also retesting the back end of this. So we've got the base of the structure. Okay, we've got that structure there. That is the base. So if we're going to move to the upside, the base is likely where we would see the impulsive move and then a move to the upside. But based on this momentum, it doesn't make sense, especially after a structure like that, for price to just rocket to the upside, especially when the next significant high is all the way up there. So that tells me that this is likely, price will likely consolidate, especially when we have this much volume just above a low. Okay, if we are going to move to the upside, usually we see these little tighter corrections, then we move to the downside and then push up and do something like that. We don't usually build volume above a low if we're going to reverse from there. So that's another point of interest. So that adds fuel to the idea that this is, especially if Aussie Kiwi is doing a similar thing, that we'll likely get something similar on Aussie CAD. And if we just zoom in, what do we have? We have a sharp move up followed by the sharp move down, suggesting that's where the liquidity is, especially when it's the retest of the back end. Whoops, the retest of the back end. Where is it? We're on the wrong time frame here. The retest of the back end of that. Okay. So what I'm looking for in this instance is I'm looking for the same thing again. I'm looking for that structure there. Okay, and then I would look to get short with a risk entry, stop loss protected above the low of the structure that I just showed you. And then once again, if we measured, see there was an entry here, but you would have had to sit up, and I don't sit up for trades. I let the trades come to me. And then if we measured that, that would take us down to there, which makes sense because that's a sharp move. Okay, so that would be where I would anticipate some liquidity and some profit taking. And if we were going to push lower, I would anticipate price needing to build some volume, especially after a move like that. But so that is Aussie CAD, and we shall see what happens. I've got the alert set. Just here we go again. All the alerts are going to go off. I don't know what that was. Euro Aussie. Okay, we deal with that. Okay, now the alert has just moved, so we'll put that back where it was. Right, there we go. So that's Aussie CAD. Hopefully that didn't cut out my vocals when the alert went off, because that's usually what happens. So West Texas Oil really having to be on the ball at the minute because the market is moving so fast and there's just alerts going off all over the place. So it's quite hard to keep up, especially when you've got 5 other income streams to manage and a terminally ill partner to look after. But that's a completely different subject. So on this one, we can see, okay, if we just zoom out. So we've broke above this height. So this is not the best price action, but we have a gap. We left a gap to this low. Okay, so we have a near miss to that low. Okay, we had this high here. We broke above. You can see all those big wicks above. And then we completely capitulated to the downside. And this to me looks like a move to the downside to take out this low, and most likely this low that this low near missed to, which would give us that kind of structure. And then potentially we move into the upside from there to take out that high. But we shall see, which would make sense as well because we have this kind of structure as well. Okay. So if we just zoom in a little bit. Okay, I'm just being mindful of the time. Okay, so we had that close there yesterday with a bit of a wick below it, so I'm not surprised that we're moving up. But if we just zoom in a second, this becomes a little bit more clear. Okay, we look at this on the 1 hour chart, so we can kind of separate the structures. We have that structure there. We come back up, we retest the back end of that. Okay, price comes down. We leave a bit of a footprint there. Okay, we tap into that area by way of a reversal structure. Price comes down, leaves a footprint. Okay, we move down correctively, come back up to give us that 1, 2, 3. In this instance, we don't quite reach it. Sometimes we don't always reach the high and we just sell off. Okay, let's just zoom in. And then what happens? Price breaks the low of the structure, comes back up, leaves a bit of a footprint. We near miss to that footprint. What happens when we near miss? Usually if we near miss, we come back down and come back up because the orders that are still up there and being placed in the area dragging price back up. We move a little bit higher. I'm not surprised by that because we may be retesting the back end of that. Okay, so there may be liquidity there as well. And you can see we've moved up exhaustively, low momentum candles and lots of them. Okay, so what I'm going to be looking for in this instance is I'm looking for a break back below. So I'm looking for a break back below this area of interest, followed by a 15-minute flag, just because of the makeup of this, because it's quite a strange angle as well, and just because the overall sequence is a bit strange or a bit atypical on West Texas Oil. I'm looking for a push down and a 15-minute flag, so just a little bit more deliberacy. Okay, and then I would look to get short on the break of the flag, and I'll be able to manage it down to this first little consolidation there, which I don't think holds much weight for something in the region of 3%. And then what I would do in this instance is I would set a take profit literally at the low. So I'll measure from the range. I'm not interested in the 90% mechanical management here, because my rules stipulate that there must be 5% profit before I set a take profit at the 90% area. So instead, I would set it at the low, and that makes sense as well to me, just because of it's a bit of a strange sequence as well. So I'd rather be in and out of this trade rather than trying to hold it when price could mess around. So that is West Texas Oil. So let's move on to the last pair, which is Kiwi CAD. So Kiwi CAD is a slightly different entity. I do prefer this to West Texas Oil in many respects. We have the sharp move up there, followed by the sharp sell-off. We near missed the area, which gives us the middle section, which we typically see. We then get the impulsive move out of it. Break above, catch people on the wrong side of the market. In this instance, we don't commit straight away, and that's likely because we have this sharp move sat above, which caused a massive sell-off. So there's probably a lot of liquidity there. So that's probably why we scoot back up, because this high near missed to it. We then tap into the area, and then we see the impulse correction continuations to the downside. Okay, in this instance, I like the fact that, so it makes sense to me that the sellers would likely be getting out of their positions around this area, and we could potentially capitalize on a move to the downside to that area if you wanted to hold it. But if we zoom in, I like the fact that we're also trading below this consolidation. So price did not find enough liquidity here to send it to the upside. So that gives weight to the idea that this is just an impulse correction continuation to push lower. Okay, if we zoom in, you can see we have a bullish wick. We've wicked to the back end of all of this. And when we wick to an area and not through it, these wicks often get filled. On the 4 hour, what have we done here? There was some volatility. There was a lot of news coming out of Japan, I believe, in the night. We've wicked to this area of value, which this area of value near missed to, which just so happened to be the retest at the back end of the previous structure. On the 1 hour chart, we've wicked to it again as well. So it's no surprise to me that we're seeing exactly what we're seeing now. Price coming up to fill that wick. Okay. So the lower time frame structure, I'm not a massive fan of, but the higher time frame direction makes sense. So what I'm looking for is for price to come up and fill that wick and to tap into that area where we kind of near missed to it a couple of times. And that would be, as I said, the retest of the back end of the previous structure. Okay, we will be retesting the back end of this low. If we look at this is actually a separate structure. We have a bit of a consolidation here, and then we come back up, scoot back up, tap into that. Okay, and then this is kind of the footprint after the break of all of this structure. So it makes sense that we will gravitate back towards there. So I'll be looking for a push into that, a tap into that area of value, a break below this area of interest, so back below this little running channel there, and then I think it could be all systems go for a move to the downside. And then what I would do is I'll be able to manage this down to this low, the low of this structure here, okay, for something in the region of 2.5%. And then in this instance, what I would do is I would measure from there to there, which would give us something in the region of 5%. Let's just have a look at the mechanical management. Let's see where the 90% area takes us. I'm doing this crudely, not exact. So in this instance, once again, just with West Texas Oil, I would actually set the take profit at the low to give me the minimum threshold of 5%. And I would trail my stop loss at the same time. So I hope you've enjoyed this video, folks. As I said, just because moves happen and I happen to have forecasted the direction, that doesn't mean that a strategy works if you're watching on YouTube, or if that doesn't happen, it doesn't work. It's about managing risk, okay? And I was able to pick the direction of the market with a very high degree of accuracy, literally within about a month of trading this strategy. I've been doing this trading this strategy for 4 years now. It's not about picking the direction. That's the easy part, relatively speaking. The tricky part is timing the entries and managing your risk. Okay, so risk management first and timing the entry first. Forget the whole nonsense about being right. It's really not important. You could be wrong on the higher time frame direction 100 times in a row and still make money if you know how to manage risk. And I'll just leave you with that thought, I think. But I hope you've enjoyed this video. and I'll see you again in the next one. Thanks very much for watching.